Our next guest says Walmart has a massive advantage over Target right now. Excuse me. Former Walmart U.S. CEO Bill Simon joins us now to break down today's numbers, what we can expect from Target's report next week. Bill, great to have you with us. I'm going to start off with a question that I posed to Tim just a couple minutes ago, and that is, at 31 times next year, is Walmart worth it? Is it overvalued at this point? Is it well valued?
Well, Walmart's worth whatever anybody's willing to pay for it. Right now, it's Walmart's world, and everybody else is just a visitor. They're literally built for this. You're seeing the magic of the supercenter, the velocity that comes from their just massive grocery business that's now being translated into some growth on the general merchandise side, which is really, really encouraging. As far as Target goes, if you break down their category, the comparisons category by category, the performance is not too different. The real difference is in the food mix at Walmart and the traffic that food mix delivers. And Target just can't match that, nor can really anybody. Amazon was a little bit soft this last quarter, softer for Amazon, because they don't have the ability to deliver the buy online, pick up in store grocery model that Walmart's delivering. And with the trade down now coming from the 100,000 plus consumers that they mentioned in the earnings report today, things are lining up really, really well for them.
All right, so you see Sam's Club, that was an outlier as well. You start connecting dots, Bill, and you say, Target next week. I mean, there's a huge bullseye on that report in the form of a lot of things, but, declining traffic growth has been a story. I don't know how that gets better when we hear from Walmart and hear what they have to say. What are your thoughts on that?
Well, the only thing that makes me a little bit encouraged is that Walmart reported some flattening or even slight growth in their general merchandise categories that we hadn't seen in probably 2 years since the peak buying of the pandemic. If that carries through to Target's report, if we see an improvement in Target's general merchandise business, I'll feel a lot better about the consumer going forward. That's really what I'm going to be looking for in Target's report.
Bill, it sounds like you're really favoring Walmart at this time, and one might think that you would always do that, but you haven't when you've come on the show in the past. But what sticks out in my mind is something that you said the last time that you were on, and that is that the gain of the high-income consumer as a new, demographic, that's sort of a risk to the Walmart story because they typically don't hold on to those consumers when times turn better. Is that still a risk in your view, or not as much anymore, seeing that they're still continuing to gain in that cohort?
Well, it's a risk. I think they'll keep a portion of them, a percentage of them. But as things brighten up and the economy, sort of turns back into a much more positive direction, the higher income consumers go to quality and they go to convenience. And Walmart, is a fine quality product, but they're not the high end of grocery. And so a good portion of them will move back. But on the other end, you'll see a filling in on the bottom side as people in the middle income group start to recover some. So that's a dynamic that constantly fluctuates for Walmart. I like Walmart in the next 12 to 18 months, but as this food tailwind that they've been sort of riding for the last couple of years eases and the economy returns to a more robust general merchandise business, I think they'll have challenges from Amazon, from Target, and from hopefully we'll see a rebound in some of the department stores.
Hey, Bill, you've obviously been in retail for a lot of different economic cycles, let's call it over the last few decades or so. When you see unemployment rise the way it has over the course of the last year, what do you expect to see from a consumer looking out 6 months, 12 months, that sort of thing? Maybe, does it signal the potential or a higher potential for a recession than maybe some economists are pricing right now?
With employment at the levels that we're at, we've never had a recession. We'd have to see significantly more job loss for me to start to get worried about a recession. I still worry more about a return of inflation as wages are improving, and they have been. And if employment stays at these levels or even improves with the reports today, I worry that there's going to be too much money in the market again, and we're going to start seeing more inflation. So I'd be more cautious of inflation than recession.